Today, we're going to talk about taxing of Social Security benefits. Hope you enjoy. When we put together a retirement income strategy for an individual or a couple, oftentimes they're surprised to find that some of their Social Security benefit is going to have to run through the tax filter, and they're going to end up paying income tax on it. And the statement I'll typically hear is, well, hey, I didn't get to deduct that Social Security that they took out of my check, so why am I paying taxes? Well, it all began back in the 80s, and then in the 90s, there was an additional layer put in place. But basically, what happened was a threshold was created. So if you're married and filing joint, and you take your combined income, which is defined as your adjusted gross income plus half of your Social Security and any tax-exempt interest that you earned. You add those numbers together. If you're married filing joint and those total numbers are below $32,000, then you don't pay any tax on your Social Security. Your Social Security benefit will be tax-free. On the other hand, if that combined number exceeds $32,000, then you begin to pull some of your Social Security back in up to 50% of the amount that exceeds that threshold. But then there's an additional calculation that was put in play where if your income exceeds $44,000 as a married filing joint, that same combination, then up to 85% of your Social Security becomes reported as taxable income. So the net effect is, in the current tax environment, up to 85% of your Social Security can get drawn back in on your 1040 and become reported as taxable income. Well, this is important to know. And if we go back and look at a single filer, the threshold starts at $25,000. Once you get beyond $25,000, then up to 50% of your Social Security can be drawn back in. And then when you go over $34,000, you get into that 85% bracket. And it's a progressive number where it keeps pulling more and more in until it hits whatever that threshold is. So why is this important? Well, if somebody knows this ahead of time, then as you begin to think about creating a retirement income strategy, you can bring these factors into play. And maybe you're able to structure your income in such a way where you don't have to pay tax on your Social Security, or you minimize the amount of tax that you have to pay on your Social Security. Or if you're at a point where you're already retiring or you're about to retire, understanding these thresholds and where they are can allow you to implement some strategies where you control the amount of Social Security that's being taxed, and potentially combine and time that with some bracket bumping strategies, Roth conversions, and things of that nature. So while oftentimes people are looking for chasing the best return or whatever, I believe you can make a whole lot more headway if you focus on things like minimizing the tax on your Social Security, understanding how these things are going to affect you, because every dollar that you don't have to pay in tax is like an additional rate of return. It's an additional dollar that you're able to keep and spend yourself. So if you have questions about this kind of information or anything related to retirement income planning, insurance, those kind of things, feel free to give us a call here at Westside Advisors and Insurance Services, and I hope you have a great week.